The market holds and pushes higher as expected. Is it time to be cautious? This is Invest with Jacob. Okay, guys, so in last week's video, we talked about the fact that we should be looking for the market to hold support and start to push higher, and that's exactly what we saw. The market held exactly in our support area that started to push higher at the end of the day. Now the question is this time to buy or be cautious? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. Highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, I am getting great reviews on our Elliott Wave for Beginners course. As you can see on the screen, it is helping people understand the market in a way that makes them profitable traders and truly know when and where to look for trades. If you'd like to be part of that winning team, stay tuned for later in the video. But for now, let's jump into this chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And as of right now, we have a very strong 5 waves down. So off of the top, what we would expect if this was going to be a B wave high is for a C wave to start with an impulsive move, which means 5 waves. So we got wave 1, wave 2, wave 3, 4, and 5. All of them hit their targets. All of them retraced where they're supposed to be. It is a second degree or higher degree 5 waves down. It's not just this 5 waves off the top. We completed another 5 waves. And then what we said last week is we should be looking for an ABC back up for wave 2. And then you would look for 1 of 3, 2 of 3, and so on. So if we are pushing up in that ABC, like it does appear that we are, we would look for the A wave of that to hit the 45, 25, 45, 35 region, up to as high as this wave 4. It could go a little higher if it's going to test higher. The higher it does go in the first push, whether it's the 382 or the 50, the higher you would expect it to hit up here. So the 382 would be our first target around 45.25. There's also good resistance at 45.20. So we would look for that A and B and then a C wave up toward 45.46. We'd like it to stay in the 45.67 region, but as high as 45.92. It doesn't have to stop at 45.67. That's just the most common target. So 45.67 would be our overall common target, but anywhere from 45.46 to 45.92 would be a perfect landing spot. And then you'd look for 1 of 3 down, which should come back down to about this low and fail. 2 of 3 up, and then down again. And so one thing to note and why Elliott Wave works, guys, is because you have constant, naturally occurring technical analysis. If you look at this chart right here, okay, where I just drew the lines, everybody says, oh, Elliott Wave doesn't work, but then they'll tell me there's a head and shoulders pattern. Really? You mean like this inverted head and shoulders right here that naturally occurs in Elliott Wave tells us we're going to get the bounce we should get? Or maybe you were talking about this head and shoulders pattern here after wave 2, and this is why it works. Because once wave 1 comes down into support and bounces, you get a naturally occurring inverted head and shoulders that brings you back up for wave 2. If it fails and we follow through to the downside like we normally would, you get a naturally occurring head and shoulders here. And what happens is you come back down on wave 1 of 3, test support, bounce to give you that right shoulder right here, fail, and then come down and break support. And this is why Elliott Wave actually works and actually is something that you can use to chart and understand the market, because the Elliott Wave patterns, if you break them down into smaller patterns, are actually just technical analysis broken down into a way that understands how these waves work. The reason wave 3s are so strong is because they're the backside of this pattern that's a 1-2 head and shoulders pattern where the backside plays out, breaks through support, and continues. So this is the crux or the backbone of Elliott Wave, is that it's built on smaller technical analysis along with the herd theory and the Fibonacci levels that allow us to understand where that analysis works. So just a heads up for those of you who love to tell me that this doesn't work, but will tell me all day that a head and shoulders is playing out. So anyway, that would be our ideal pattern here, is that we push up toward that 45.60 area and then back down again. Now, we are selling off of a bigger diagonal to the upside, as I have it charted, so it's not uncommon that one of 2 things has happened. Either we created 5 waves down right here where I have this bracketed 3, and this was wave 2, and this was 1 of 3, 2 of 3, and then we break down in 3 of 3 from there. Now, for that to happen, it needs to break down below 44.4850. I'm calling it 44.50, and then push through 44.25. If we see this high hold here at 45.42, and they come up and make a high here but can't push through, and they come down and break this low, that's going to be a strong indication that we're heading lower in a more direct pattern, where we have wave 1 all the way already in place here, wave 2, 1 of 3, 2 of 3, and then down. Okay, so that is a possibility. The other possibility is it doesn't reach quite as high as you would expect, and wave 2 tops around this wave 4 high, around 45.42 or slightly above it, and then you come down. So those would be the other 2 options that you would look at for this move up. Given that we have broken back into this wave 1 territory, I think it's unlikely that we come back to make any kind of new high here. I think at a very minimum, we see A, B, C down towards 4,300 or so in wave 4 of a bigger wave 3 in a bullish count. But given that this is 5 waves down in a higher degree and how it looks, I would be cautious on this bounce once we get up into this region, if we get up into that region. Over on the NASDAQ, okay, the NASDAQ's playing out slightly different. We've been talking about this blue box up here as a potential bounce in wave 2, but now that we have already had the push down we've had in the NASDAQ and their continued move lower, it looks a lot more like a leading diagonal where 1 is in, 2 is in, and this is A, B, C for 3. We'd look for A, B, C up for 4, and then down for 5, which would target about 14,747 or so in an ABC type move. So NASDAQ's a little bit different, where we're tracking wave 4 as a bounce here instead of a wave 2, and then we'd look for the completion of that diagonal. So you can see the diagonal lines I have drawn on the page. You'd look for the completion of that diagonal down toward the 14,747 area, and then a bigger bounce, and then down from there. So NASDAQ's playing out a little different than ES. It's a little further along in some regards, as it's broken different support, but it's not as far along as in the fact that it has a solid 5-wave structure to the downside, but it does have a solid leading diagonal structure. We just need to see all 5 waves play out before we get to a point where we can count on that diagonal to the downside. Again, to the upside, I don't think we're looking at any kind of new high on this bounce. I think the most likely scenario, if it is not a diagonal, would be that this is wave A, you get a B wave up, and then a C wave down from there toward the 14,000, 14,500 region, which would again be a wave 4 of 3. Then we'd look for 5 of 3 higher. But right now, again, on these bounces, I would be very cautious once we get up into that resistance area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. Because I want you to get in there, I want you to make sure you love it and become part of our trading team before you ever spend a penny, and you can cancel at any time. As I mentioned earlier in the video, we also have our Elliott Wave for Beginners online course. If you don't understand Elliott Wave, I break it down for you in 25 videos where I go over your introduction and mindset, what to expect with Elliott Wave, how to keep it simple and make it clear, and why it works. We also go over your chart setup and tools, where I tell you every tool you need along with your chart and Elliott Wave, so that you can understand where to measure these points, how to understand where they are, when tops and bottoms are looking like they're coming in, all that different kind of stuff. And then finally, we go through each Elliott Wave, waves 1 through 5, and ABCs in a basic way, because it is a beginner's course, to give you the understanding of Elliott Wave so that you can finally understand the market instead of trying to decipher the news cycles. You can see from all of the testimonials that it is helping people do that, and it can help you too. Now, the really cool thing about it is, if you don't want to buy the course, it is included with both monthly memberships. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trades that's so unique. Something you have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Key takeaways for today. The biggest key takeaway is I would be cautious on this bounce. It can target as high as 45.72 to even 45.92. I do not see it coming back to make a new high on this bounce. I would at minimum see an ABC to the downside. Our primary path would be a wave 2 up, 1 of 3, 2 of 3 and down. Secondary paths would be a shorter wave 2 or wave 2 is already in, or potentially the overall bigger ABC. On the NASDAQ, same type of setup, only we're looking at a potential diagonal to the downside, where we'd look for a wave 4 up and then a wave 5 down, and then another bounce in wave 2 and down from there, or a bigger bounce for an ABC to the downside, which should look towards 14,000 to 14,500. Guys, that is the market update for today. I will talk to you tomorrow.